Welcome back to the channel, ladies and gentlemen. I am Ryan. Today I'm going to be talking about my favorite real estate investment trust. So what is a REIT? A REIT, R-E-I-T, simply just stands for a real estate investment trust. All that means is it is a publicly traded real estate company that owns income producing properties. They can own industrial warehouses, they can own office space, they can own malls, they can own retail. So now I'm about to tell you about my favorite REIT. I'm so happy that I own shares of this stock. I am never, ever going to sell it. It is a publicly traded real estate company whose largest tenant is Amazon. I know that currently there is a lot of volatility in the stock market, especially with what's going on with GameStop and AMC, etc. I posted a video about that earlier today. So if you're looking to invest in something that's a little bit safer than the traditional stocks that are high growth, tech, etc., this is a pretty good one. And not only is it a good stock, it's actually technically undervalued, and that's why I'm talking about it today. Side note, I used to work in commercial real estate in Los Angeles. I was an office broker, meaning I worked with tenants that leased office space. It was around 2013, 2014, etc. We would have industrial brokers. We had brokers that worked on industrial. And at that time, industrial broker was not nearly as sexy as it is today. It was all about office leasing. But with COVID, office leasing brokers are probably not doing as well. And now, I probably, if I was still in the business, would want to be an industrial broker. Think about it. The future has a lot of e-commerce. There are a lot of things that you buy on the internet and it gets shipped to you. Well, where do you think all that comes from? It comes from warehouses. And those warehouses are owned by Prologis. They're owned by this company. In fact, let's take a look at their top tenants and you decide what you think about this, because it's pretty good. Now let's take a look at their largest tenants. Number 1 is Amazon. That's great. Number 5 is FedEx. Number 6 is Home Depot. Number 8 is UPS. These are all companies that I'm sure you've heard of. However, very large companies that you might not heard of are companies like DHL, XPO Logistics, Geodis. In here we also see BMW and Walmart. We have PepsiCo. Also, interest rates are basically zero. So if Prologis has so much demand from all this e-commerce business, they can go out and easily purchase more warehouses, develop more warehouses, get loans from banks at basically 0% interest. It's a great time to be in real estate. It's a great time to own real estate, and it's a great time to be a REIT. And another thing, their chart looks like Mount Everest. It just goes straight up. There's been some dips, but it just goes straight up. And so what I did, which I've spoken about in my previous video on Salesforce, I had a plan. I really wanted to buy shares of Prologis. The stock was a little bit higher than what I wanted to buy it at. So I had a plan and I executed it, because the stock dropped a certain percentage amount that I wanted it to, and if it went below a certain threshold, I was going to buy. So what did I do? I bought. Again, I keep saying it. If you fail to plan, then you plan to fail. And time in the market is more important than timing the market. I'm aware that there's a lot of volatility right now. So if you're looking for a safer asset, this is it. I know that this company is amazing for the long run, and they pay me a dividend. Not only does the stock just continue to go up, they pay me a dividend. It's great. And you know what we love? We love free cash flow per share, and they are great at creating free cash flow per share. With that being said, I'm going to dive into the DCF model so you can see why this stock is undervalued. As you can see, I already ran the discounted cash flow model, but as always, I'm going to rerun it for you. The company's name is Prologis. This right here is Morningstar Key Ratios Financials page. As always, when we value a stock, we're looking at the free cash flow per share. They do not have 2020 reported. We're going to take 2019 free cash flow per share, and we're going to go back 5 years and take 2014, and we're going to project our compound annual growth rate to go forward. 3.32, 3.32, 1.05, 1.05. Compound annual growth rate of 26%. That's massive. We go with a compound annual growth rate that is the same, 10% discount rate, which is the annual return on the S&P 500, GDP growth of 0.03, and the stock is currently trading at 103.4. Stock is currently trading at 103.4. That currently gives you 8% upside. Now let's just assume that with COVID, work has changed, e-commerce, the future of real estate will be a lot of industrial. So let's just go with the 28% future growth rate, slightly higher than what they've done historically in the past. It's not too far-fetched. 3% GDP growth. That gives you an intrinsic value of 120.84. That is 16.8% upside from the current price. Now let's run our most bullish scenario, which again is not going to be too outlandish considering their compound annual growth rate has been 26%. Let's run with 30%. Let's run 10% discount rate as always, 3% GDP. We get an intrinsic value of 130.12, currently trading at 130.4, and that is 25% upside. Under all scenarios, Prologis is a buy. As always, if you enjoyed this video, make sure to hit the like button as well as subscribe so I can continue to uncover undervalued stocks for you.